Welcome back, everyone. Welcome. This is another edition of Forex Tech Magazine with your host, Lewis. Hope you guys are doing well. I want to say especially extra special welcome to our two new followers that started following us yesterday. Welcome, guys. Um, Before we get too far along into this, we want to go ahead and get out the disclaimer here. The disclaimer goes a little something like this. Uh, any and all information that is given by us should be considered to be solely for the purpose of education and entertainment only. Nothing that we give you should be considered to be financial advice. And if you are in search of financial advice, our suggestion would be for you to seek out the services of a licensed, competent advisor. So, with that being said, we want to once again welcome everyone here to the program. And what we want to do next is kind of go ahead and get right into the topics of today. Now, the way we always like to start this out is like to do a look back, like to look at what went right, what went wrong over the session with the pairs that we are currently in. If we are in currently in a pair, and right now we are in the Canadian Great Britain pound Canadian dollar, the Great Britain pound Australian dollar, and Great Britain pound New Zealand dollar. So let's just start out with the Great Britain pound Canadian dollar and look at this one and see where we at, what went right, what went wrong, and what can we do to make this thing better. Now, today you're going to see a little something extra on the screen, and what we have up here today is a Bollinger Band. And if you're not familiar with Mr. Bollinger or Mr. Bollinger's band, I'll give you a quick explanation of it. The line on the middle is is a moving average, about a 20-period moving average, and then the line at top is one standard deviation away from the moving average, the current 20-period moving average, and the line on the bottom is one standard deviation away as well from the moving average. And so typically, if you know anything about math, if you study statistics or anything like that in college or in high school or whatever have you, you understand that price typically stays near the average, and if it moves away, it has a 66% probability of a moving away one standard deviation. Goodness, what it was. I can't remember. But anyways, the further you get out, then there's it goes a little bit higher as far as the probability. The point is this: uh, is that when price typically moves out and hit one of those outer bands, then there's a higher probability that price is going to then retrace the steps and come back in to the middle, to the average. And so you've seen it before, right? Price comes out, goes back up, comes to the middle, price goes down, it comes back up to the middle, price goes down, comes back up to the middle, goes up, comes back to the middle, goes up again, comes back to the middle. And it just kind of repeats this pattern, so forth and so on, over and over and over again. And a lot of people trade moving average. A lot of people trade Bollinger Bands different ways. The way that I typically use it, or the way I'm using it right now, I'm just looking at where the price is in relation to that middle band. And honestly, with this right here, I could have just used the 20-day moving average. I'm just trying to see if price is going to close above that middle band or is it closing below that middle band. This particular one here is closing above that middle band, and so it really is a gives me pause to be cautious here, because even though we see a price that's been moving down, because it's closing above that middle band, it almost makes me believe the price may continue to go up and revisit this area of resistance here. And if that would be the case, then that means it would push me out of this position, which I would definitely take a significant loss in that one. But we're going to see how it plays out, right? Because initially when I took this position, it was because price was moving down lower. Let's look at here. So as you can see, price is moving down lower, and the expectation was that price is going to continue to move lower because it was making lower lows and lower highs. So I initially took this position, but as you can see now, price has made two significant moves up on the daily chart. And if we look on the hour chart, you can see how price has definitely kind of like swung back in the opposite direction. This is where we're at now. It'll be interesting to see how this plays out over the next 24. And that's what we're going to do. We're going to sit back and look at it, see how it plays out over the next 24. We'll at least come back down to this area of, what's the area of support or resistance right there? The support and the resistance. Yeah, the area of support. We'll come back to at least the area of support. So I don't know. I'm going to look at it and see. And the next one we'll look at real quick. And we're going to come back and revisit this one. Like we're going to come back and revisit the other ones. I just want to kind of like just show you real quick what we're in. And then come back and talk about these things in a little bit more detail here later. Once again, same thing. I mean, this right here, price is moving down. As you can see, it's well under the moving average for this Bollinger Band. All right, we've broken back through that level of support. The key thing here would be to see if this closes below this level of support, because that would definitely signal that there could be a continuation. It's going to continue to happen here, where price is going to continue to drop. And if it does, we have a really good take profit here, which is probably, I think, about 300, 400 pips away, which would be really awesome. If we really use that, that would be great. Oh, my bad. That is about 500 pips away. So $10 a pip, that's $5,000 right there, potentially off this trade. If we can get this trade to go ahead and follow through. So that would be awesome. And let's look at this last one here. This is the Great Brent Pound, the zillion dollar. Kind of the same thing as we just looked at with the AUD, which is prices, has been moving down over time. Now we're getting to this period of support here, and the goal will be to look to see if price can close below the support, therefore signifying that it could potentially break all the way down to this next level of support here. And as you can see, price is still up under that 20 moving period of the Bollinger Band. Once again, it's just a little added comfort that price is moving in the direction that we want to move into. This over here, of course, gives us no comfort at all. This, in fact, installs fear in our heart that this thing is about to break and hit our stop loss. And if it does, well, shit happens. And just remember, anytime you make a loss, money can be recouped. Only reason why we put a wide loss like that was just, once again, just looking at where we were at, the levels that we were at, hitting that target should have been a no-brainer. And had we actually been actively managing this right here, we would have put our stop loss down below our entry buy or entry sell, and would have had a risk-free trade here, but we didn't, and so therefore, it can't unring a bell. It is what it is, and we're just gonna move forward with it. So let's look at some of the levels where we're at right now, money-wise, profit, loss-wise. Right now, that Great Britain pound, Canadian dollar, is taxing us at about 1,700. Great Britain pound, Australian dollar, we're up almost 200 on that one. And then the Great Britain pound, the zillion dollar, we are down about $83 on that one. So for a total profit loss, this situation, a loss of about $1,500 is that we're looking at right now. If we would close this account out at this point. But once again, we want to see how this stuff is going to play out over the next 24. All these numbers could turn green within that time frame, or they could all turn red and really just, piss me off. But anticipate, though, we're going to have green at least on two of these numbers. This one right here was actually green earlier. So we'll see. We'll see. Not too worried. Not really worried about it. Like I said before, with the trades we got on, all it takes is really one trade, and then we're back to profitability again, so I'm not worried about it. Anyway, let's click out of here. I don't want to see that. Let's get into looking at a little deeper analysis of these trades. Next thing I'm going to pull this Bollinger Band off. I hate And once again, that's just me. I hate having a crowded screen. I just think it's so annoying. Personally, I like to look at something that's really simple. I like to look at support and resistance lines on here, and then maybe just one other indicator. We had RSI up here as well. And the purpose of the RSI, just look and see if something's overbought or oversold. Uh, and once again, if you got something that's oversold and it's right there next to support, then of course you're gonna be looking. It's added confirmation to go ahead and buy. And if you got something that's over purchased, it's right there next to resistance. Once again, it's added confirmation that it may be an opportunity to go ahead and sell. So that's typically how we use the support resistance, and then we also just kind of look at where it is on average, and anything above 50 lets us know that the market is trending up, and anything below usually tells us that the market is trending um, downward. Now, if you guys got any questions about anything that I just said or anything that I've covered here or covered lately, go to our website, forwardsetmagazine.com, and review the articles that are there, because that's going to give you an in-depth explanation of everything that we just talked about, right? And if you don't feel like reading, you just rather just like, just rather listen to somebody else kind of talk about it, you know what I'm saying? Somebody else show me some charts and show me some visuals on what is this guy speaking about. Once again, go to our website and download the free, that's right, FREE, download the free um, online training, right? Download that thing, man. Pocket that, right? Because that can help you learn the basics of what we're talking about here today. So that way, when you tune back in, tomorrow, next week, or whatever. Actually, next week, because today's Friday. It's not gonna be any episode tomorrow. You will be able to follow along and understand completely what we're talking about here, right? And that's going to be a huge advantage to you and a huge advantage to your trading, because the more you understand the basics, the more you can do, and the better trader you can potentially become. And that's what it's all about: become a better trader, right? Because why is that? A better trader is what? Profitable trader, more profitable trader. Hopefully, right? If you're not getting better, you're not being profitable as you're getting better, then what's the point, right? So looking back at this trade here, we got a support resistance line that's already plugged in here from, a couple of days ago or a day or two ago. Just to recap, for those of you who may have missed why I got into this trade, we'll go right through it, right? Looking at this trade, looks like the currency pair is moving sideways. And remember, currency pairs can only move three directions, which is, that's stocks, period, or stocks or investments, period, right? It's up, down, sideways, right? And typically what it does, it moves a variation of the three, right? So it moves up and to the side, right? As you see here, or it moves down and to the side, right? As you can see there, right? Very rarely will you see something just move up, 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 straight up, right? It's either gonna move up and to the side or down and to the side, okay? And depending on what type of angle it's taking going to the side, it's really going to depend. It's really going to have a lot to do with the aggressiveness or the velocity of it moving up or down, right? So if you get something that's getting a really good sell-off, I mean, maybe it's a breakout, right, to the south, or breakout to the north. Typically, especially if it's been coiled up for a while, whereas hasn't had a lot of energy, just been sitting there for a while, and a lot of buyers, a lot of sellers come into the market all at once, you will see a sharp angle either up or a sharp angle down, with very bullish or very bearish candlesticks, right? And the exact opposite if it's one of those things where it's kind of a lazy currency pair, where people have just been kind of trading it. So the may not have like really powerful, really big bullish candlesticks, but you'll have some bullish or some bearish candlesticks, and what happens is kind of push out to the side. So it's moving up or it's moving down, but it's not going to be as aggressive, and it's not going to be, you're not going to be looking at 150, 200, 300 pips or whatever on any particular trading day. You may be looking at 50 to 75, pips on that trading day or whatever. Not very aggressive, but it's getting the job done. So anyway, when we look at this candlestick, or we look at this currency pair here, which is the Great Britain pound, Canadian dollar, when I first came in, this is what I saw, right? Price had came up, prices come down, prices gone up, prices in the process of coming back down, right? But it hasn't made its way back down yet. what price was doing is actually consolidating over here, right? Doing a little wedge, little triangle. And as you remember, these triangles typically, it's a continuation pattern, and the price is going to continue in the direction that we originally going in about 70% of the time, right? So after I saw this right here, I said, okay, wow, look at this, it's wedging up, right? So what I want to do is I want to position myself right about here, right? So when price does break, or if it does break, let's see it's coming to a point here, that I would essentially be able to capitalize off that and ride price all the way down to right about here. And I put the stop price a little bit below what the current level of support was, just in case if we get a good spike going down, right? Because once again, price is coiled up here, expecting a lot of sellers to come in and just continue to push this thing on down, right? So I thought it might be a good place for a breakout to occur. Little did I know though that after being in there for a day, right, which we did get a good price movement down, price would reverse for 2 days straight and bring us to where we're at right now. All right, with this little top is happening right here. It's kind of like an indecision top, which means that price came up 2 days, good bullish move up, but right now it's kind of indecisive. Buyers don't know whether they want to continue to push it up, and sellers don't know if they want to go ahead and start trying to bring this thing back down. Part of the reason why is if you go over here and you look on your economic calendar, what you're going to see is that around 8:30 Eastern time, you're going to see that you got some information coming out for the Canadian dollar. You got the net change in employment, and you have, what else is there? The unemployment rate, and a whole bunch of little information in between. And so definitely it's going to have a huge impact on that currency pair, because definitely it's going to affect the Canadian dollar directly one way or the other. So with that being said, may not have that much movement right now, but definitely before the end of the trading day, you're definitely going to have some information that's going to come out. It's going to impact this thing, and it's going to move it one way or the other. Right, so it's either going to continually move it up, which in that case it would hit my stop loss and take me out of this trade, or it will proceed to bring it back down, which in that case should bring us back into profitability. So I'm going to leave this trade as is. The other thing about the Canadian dollar, if you haven't already noticed it and nobody's ever told you about it, it is correlated with the price of oil, right? So excuse me, we have situations in the world where oil is going to be coming in more in demand. It will, definitely have an effect on this price. And also, if you see something where there's a lot more oil production and the price of oil is starting to drop, you'll see price fluctuations with Canadian dollar pairs also. Okay, those are things to be aware of. And like I said before, you see me over here looking at the economic calendar. Even though what we do is pretty much dedicated and predicated around technical analysis, still familiarize yourself with newsworthy events that may occur within the currency pairs that you're trading, because those are definitely going to have an effect on your currency pair. And you may have heard me speak about this before in the past, which I'll tell you again quickly here, is that the candles that you see over here, right? These bars, these candlesticks that you see over here, all these candlesticks are just physical or visual representation, right, of this information, right? All this economic data and information that's being processed by traders in real time, right? And what I mean by that is if you get like really good news about Brexit, right, and people are feeling positive about Brexit and saying, hey, you know what, this is going to be really good. It's going to be good for the Great Britain economy. All right, as soon as that information comes out, buyers go in, they absorb that information, and then they proceed to start purchasing this currency pair, right? And as they do, it pushes the price up, right? And with the exact opposite is that, information comes out that may negatively affect, Brexit or Great Britain pound. Buyers hear that information, they absorb it, and then they begin to start selling because maybe they're panicking or maybe they just don't like the information, and they say, you know what, let's get out of this, this right now. And as they do, they start selling off, and guess what? Price comes down, and you see it visually on your chart, okay? So, regardless you know, and this may be contrary to what you may have heard other folks tell you before in the past. Fundamental analysis and technical analysis do go hand in hand. Um, sometimes technical analysis, well, let me say sometimes. Sometimes technical analysis has a more profound effect on currency pair, and sometimes the fundamental analysis has the biggest effect on the currency pair. And uh, and the way to kind of tell the two is you got to keep an eye on, and you got to keep a visual on what's happening, you know, on the economic calendar, right? And the reason why, you know, once again, the reason why I say sometimes technical analysis has a bigger effect is because you may not have anything coming up on the economic calendar. You may not have any actual news come out, but because you see what we got these support resistant lines here, these are places in the past that have had significant price movement, right? And so they're very important to, you know, buyers and sellers because they're going to monitor it because they know that, you know, the past, especially in investments, tend to repeat itself, right? So if you came to an area that in the past had a lot of buyers come in and start purchasing a currency pair, that there's a high probability that going forward that same area is going to be a desirable area where people are going to come in and start purchasing more of that currency pair, right? Same thing if you had an area that was where a lot of sellers came in and began to sell, right? Price could be moving along pretty good, and all of a sudden it hits into that area, and people are going to come into the market and start selling. So always be mindful of those areas, and then also be mindful of any type of economic just information is coming out about a currency pair, and it could be news flashes as well. The cool thing about the Smart Trader software is, you can come over here and as you can see, you know, we got, you know, a place to put in our orders, right? We got a place to kind of like look at what's happening in the market all at once, get a little glance, right? But then we also have this, ba-da-da, which is our economic calendar already built in, and then we also have our news feed is built in as well. And the cool thing about this news feed is that whatever currency pair we're on, it goes in and it extracts that information for us from the web. So that way we have a direct news feed right in front of us that has information pertaining to the currency pair that we're looking at, which is really good, especially if, you know, we're anticipating something's going to happen, or we just something or a move just happened, and we're just trying to figure out, well, what the heck just happened in the market, right? Which is not something you necessarily want to be, you know what I'm saying, to yourself, especially if it went against you. If it went for you, you want to be like, yes, what the heck just happened, man? I'm so happy. But if it went against you, like, ooh, what the hell just happened? But anyway, so this is really good. It's really good to have, and this is something that's on this Smart Trader software. And speaking of the Smart Trader software, if you haven't already, and I keep telling you guys this, if you haven't already went to the Smart Trader Smart Trader website and register to use the Smart Trader software, then my friend, you are not a smart trader. You are a potential idiot trader who's going to lose a ton of money because you're not using all of the potential tools that you could use to help you become a better trader. I gotta take a swig of water. Sorry, guys. Thirsty. And you said, "Oh my goodness!" I hear everybody gasping right now. "Oh my goodness! How could you say that, Lewis? What are you talking about? What are you talking about?" Well, this is what I'm talking about, my friend. Is that there are a ton of tools on this thing that you can get just in the demo version, right? That can make your life so much easier as a trader. We're not even talking about the stuff that you're gonna get in the paid version that makes your life even more easier as a trader, right? So over the last 30 days, we've been using the demo version. Not too long ago, we actually upgraded to the paid version, and it was just like $21, $22, maybe 24. I'm not sure. A month. I'm not sure what the dollar amount was. It's pretty much nothing. It's like a less than, you know, one trade deal that we could do and pay for the whole thing, probably for the whole year, depending on how much you're trading. But the thing is this, right? It is a great piece of software, and I'll show you. Like one of the things I love on here is the smart trend line, right? So instead of having you go out here and trying to draw trend lines, you know, everything automatically draw trend lines for you, right? And obviously we're moving sideways, so that's the reason why I just drew it out sideways along with our lines that we already got. But the cool thing about it is all you have to do is find your lows, find your candlestick wicks, You know, once you do, click on it, and automatically the tool automatically draws your trend lines for you, right? And this is part of the smart tools um, set. All right, here goes the smart support, right? So once again, it came back here and it drew support at these candle wicks, right? And then it drew another support line over here that, you know, that it felt was a support line, all right, which is cool. And once again, it helps you as a trader because you don't have to go and think about these things. You can just go ahead and just boom, boom, bow, hit one button, and it automatically does all this stuff for you. Love it. Can't beat it. Check that out. Let's see here. What else they got? Boom, boom, bow. Smart resistance. Boom, bow, bow. Puts it in for you. You don't have to guess. All right, you can go back and double check. That's me. I always go back and double check everything. I don't agree with anything all the way, but you know what? It's perfect, man. You got smart fibs, which are perfect. Bow. Smart fibs is so great, and you see with this, all I did is came in, place one click at the low, and you see it automatically starts driving all my Fibonacci sequences on the chart. And the cool thing about it is all you have to do is just match up the color. So price retraces back to the purple line, then that means that you want to put your take profit right back at the purple line, right? And if you do that, boom, bow, you're in, right? Once again, if price traces back to the red, you're gonna put your take profit back at the red, right? Boom, bow, you're in, right? And you just do this over and over and over again, right? This is back at the green, boom, bow, you're in. And of course, the price ever retraces back below the A, then you know, boom, bow, you're out. But the cool thing is, once again, you don't have to spend time trying to figure out where your Fibonacci retracement or extensions are on the chart. All you have to do is find the lower the chart, click on that wick, and boom, it automatically sets everything for you, which is really awesome. And then the next thing, what I like is that, you know, it has candlestick formations on here. And you know, if you're going to be trading, whether you're going to be doing forex or you're going to be doing, you know, day trading or whatever, candlestick formations are a very important part of the trading process, right? For you to be able to mature into a better trader, you definitely got to have a grasp, at least a basic grasp, of candlestick formations and how they work within the trading platform. And if you look at this, right, all you have to do is hit this one button, and it's going to pull up every bearish engulfing candlestick within your screen. Look at that. Boom, boom, boom. Now let me ask you a question. If we're right near support or resistance, in this case it's resistance, if we see a bearish candlestick formation, right, and we, you know, what is that going to tell us? Is that going to tell us that we should be buying right about now? Is that going to tell us that we should be selling right about now? Well, it's probably going to tell us we need to be selling right about now, especially when it's right there by a level of resistance. Right? And had we did that, guess what? Boom, we'd make money, right? This one right here is kind of indecision because we were so close to resistance and we're actually so close to support. We don't know what to do on that one, right? So that's one of the ones we probably will stay out of the market on. But look at this. Not only do we have bearish engulfing, we can look for bearish shooting stars, right? And then once again, we're hitting the support, so we're going to kind of negate that, right? It pull back a little bit. That's not something we'd necessarily be looking for. We'd be looking more so for something that's near resistance, right? If it's short up near resistance, then that'd be something like, ooh, okay. We're gonna go back here. Let's see here. Bearish tweezer tops. Don't see anything near resistance. Go back in. Get rid of that one. Go back in. Bearish evening stars. No bearish evening stars. No evening stars. All right. And then you do the same thing for bullishness, man. Bullish engulfing, right? So if we're near support and we see a bullish engulfing, what does that mean? Oh, we should be buying, right? Boom, 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 right? Near support, buy, boom, 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 right? Will we have made money off of that? Absolutely, boom, 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 buy. So this right here, I'm not gonna go into a whole bunch of details with this, but you get my point that this right here makes your trading life easier because it has a lot of the tools built in that you would use as a trader. And instead of you having to sit down there and figure everything out manually by hand, you can just come in here, click one button, and have 90% of the work done for you. Now, I always recommend, of course, you go back over and check what's happening, and that's with anything. But the have the ability to come in and have everything done for you is, once again, is truly, truly awesome. Okay. And also to keep in mind that we are, and this is full disclosure here, we're an affiliate of the Smart Trader software. That's right. So that means essentially that if you go in and you do make a purchase by using our link, then we will get compensated for it. Excuse me. And trust me, it's not like we're making a ton of money off of this, but the money that we do make, we use this, put this back into the company. It helps us to be able to keep the lights on, right? And then also to be able to try to find new technology, new ways to support you, new ways to kind of keep this information that we're giving to you free for now. I mean, there's a big part of the information that we give you for free. There are some parts of the information that we put out there about trading Forex that you do have to pay for, and that's typically the coaching part, right? The other thing that we do is we like to come in and we coach people. And the reason why we do the coaching and not call ourselves teachers or any of that stuff is because, one, you got to have certain basic fundamentals already put in place. And there's so much free information out there about the basics, right? That all it takes is you just being disciplined enough to go out there and get it. And if you don't know where the free information is, contact me. I'll direct you to wherever I think is good free information about Forex and learning how to trade. One of the best places to start, though, however, I always tell folks, it's on our website. I try to put the information in nice, good, digestible chunks, right? So that way it's easy for you guys to understand, easy for you to process, easy for you to be able to assimilate. But then there's also a ton of other information on other websites as well, right? That you can go and just sign up for and get that information and learn how to use it, right? And once you get the basics of it and you start practicing, then we want to kind of come in there and try to help you coach you along, because typically a lot of what goes wrong with the trader when they're trading is not so much as they are picking the wrong currency pairs to trade. I mean, that happens. They're looking at the wrong direction, because that happens. You get directional bias and all that stuff. But a lot of it has to do just mentally. And that's what we're really good at. That's where we bring a lot of value to you. Is be able to sit down with you and make sure that mentally wise you're trading from a position of strength, and you're not just kind of coming there chasing trades and trading from a position of weakness, right? So that's not what you want to do. You always want to be able to trade from a position of strength and understand what you're doing, and not trade from a position of weakness where you kind of getting in there, you're just chasing the trade and you're getting killed over time. Okay. And once again, that's one of the things that we work really well at. And I think everybody can use a coach. Michael Jordan has a coach. LeBron has a coach. Even though he likes to coach himself sometimes. If you're a Cleveland fan, you know what I'm talking about. But we just think that everyone who operates at the highest level of their profession has a coach, or has a coach, or had a coach at least at some point, to kind of help them be able to bring out the best within them to be able to operate at those high levels. And trading Forex is no different. To be able to operate at the highest levels of trading, you should definitely have we definitely in your best interest to have a coach in place to help you with your progression. At any rate, that's a little spiel about why you should have a coach. So get back on this currency pair here. Once again, looked at the whole progress, thought it was going to be going down. I usually it pull back up. We haven't hit the stop loss as of yet. Like I said, we got an indecision candlestick here. Right now at the moment, looks like there is some buyers coming in. But once again, it's more like a spinning top. It's one of the indecision type candlesticks. It could move up, it could move down. I think it's going to really depend more so on what's going to happen on this information that we're going to get out of Canada coming in on the 8 o'clock hour Eastern time. And definitely before that time, you're going to see some people buying in and selling out of this position. So just kind of be ready for some price movement going on here with the Great Britain Pound Canadian dollar if you're in that. Well, excuse me, if you're in that pair. If you're not in that pair, you probably want to stay out of it until after this information comes through and the market has time to digest it. Trust me, if I could turn back time, I would. The next pair we're going to look at here is the Great Britain Pound Australian Dollar, right? Once again, just trying to keep it simple. You see my trend lines or my support and resistance lines rather are already placed on here. This is just from prior day of me showing you where I got in and why I got in and where price is relative to where price has moved at before in the past, where it's made U-turns before in the past. Right now we are definitely at a support zone, and what we want to do here is look for price to close below the support, because if we can get price to close below the support, then we don't have a good drop off before price hits the next level of support. Some people will say this area up in here could be a support zone, and it could, and I think it may play out to be a minor. Right? I don't know if necessarily going to be a major, but it's definitely something we'll look at, and maybe if we get price to close below the support today, then maybe we'll look to move our take profit up, or at least put in our stop loss. Make sure we move it in to kind of cover us going into this area, just in case if it makes market size make a U-turn and we don't meet our take profit goal, here at the 174 handle. Okay. But this one right here, it looks pretty good. I'm excited about this pair. Let's check it out on the hour chart. Yeah, so this really looks pretty good. I mean, it's been testing the support here for a minute, right? Boom, see what price broke down below it. Comes back up. Tests it. Goes back through it again. Comes back up. Goes back down. Even though it's kind of moving sideways right now at the moment, remember it's kind of moving sideways, but it's also, look. Here goes the high. Here goes the low. Here goes the lower high. Boom, here goes the lower low. So we, just off this right here, we know price is moving to the side. We also see that there's a minor to the side and downward movement. So that gives me, pause to say that this thing could and should probably go ahead and break below this support going over the next 24. Now, is it a guarantee? Absolutely not. Because I can't tell you how many times I looked at something and said, oh yeah, absolutely, bet the house on this and this is what should happen, and then come back and you know what, I'm sorry buddy, but you lost the house, right? It just didn't go the way that we planned. But the probability, it looks like it's in our favor here. And remember, when we trade and stuff, man, it's a lot of this is about just probability. What's the probability of this happening? Could this happen? Is it a possibility? Should this be something that we look at? Can we take this seriously as something that could happen? And in this situation, the probability of this thing going lower, absolutely should take this as consideration that it should and could happen. Okay? What's the next one? That's a pretty good chart. I like that one. Let's look at, what's that? Oh yeah, here we go. Great Britain Pound New Zealand Dollar. Same thing. It's making the exact same pattern, man. Right? It's looking just like the Aussie dollar, man. Great Britain Pound. Look at that. It's making pretty much the exact same thing, right? Where it's going up, hit resistance, going down, hit resistance, support, going up, hit resistance, and boom. Look where we're at now. We are off and to the side, right? And it's hit a new lower low, right? Just barely, and not anything significantly. I wouldn't count it as being significant, honestly, guys, until it bashes through this low here. Cause this is the swing low. This right here is just a just a sideways support and resistance low. Nothing big. And in fact, one thing you have to be mindful of is that you may go back and hit this resistance here, right? So you want to be careful with this one. But if we look at it just from a technical standpoint, this is resistance, this is support. Price came through support, went back up, retrace, hits resistance, comes back down, crashes on support, comes back up, doesn't hit resistance, doesn't go to resistance, right? But it comes back down to support, right? So that kind of lets me know that there's definitely some selling pressure here because price didn't even make it back up to resistance. Ow! I gotta get a gamer's chair. This is so hard. I sit on this chair for an hour or whatever, and then it hurts my behind. But anyway, um, price never goes back up to resistance. It just comes up and then it takes back off again, going back towards support. So once again, this kind of lets me know that, hey, you know what? The movement here, the theme here may be that price wants to, further decline, and we should be looking for the break down further, right? And if you look at how it looks, I mean, price has been steadily trending downward ever since the 10th of October. Right, it's only now where you kind of get a significant bullish push up. Right, price moved sideways for about 2 days. Right, we got a little bit of a indecision that's going on here. And what is this for the New Zealand dollar? Let's see if there's any information that's coming out over the next 24. Back to New Zealand, New Zealand, that should affect us. I don't really see anything. And keep in mind, when you look at your Australian dollar and New Zealand dollar, those are also considered to be like commodity pairs. So when you start getting movements in, oil, gold, and things of that nature, they're definitely going to have an effect on these currency pairs. So even though I don't see anything directly here, it doesn't mean that something may not be coming out that won't affect this over the next 24. Oh, you see right here, the gold prices may turn lower as U.S. dollar rebounds and jobs data. So there you go. And if that's the case, it's definitely going to have an effect on this currency pair. Always keep this in mind, folks. Always keep this in mind. And once again, see the advantage of having the smart trader software, right? Turned on the Great Britain pound, New Zealand dollar. Knew there was going to be some information that could essentially affect this pair that should be coming out. Try to pull up on my economic calendar what that may be. Can't see anything directly, but then here, right, the news feed came in and told me that, hey, indirectly, this thing could and should be affected by what's going to happen with the jobs report. Because the job report is definitely going to have an effect on the dollar, and so therefore you should be observant as far as what's going to happen here. So really what's going to all come down to, guys, is that once we get into the 8 o'clock hour, just kind of like hang on to your seats, man. Hang on to your seats, because that's when it's going to all hit the fan, one way or the other, good, bad, or ugly. 8 o'clock hour is really going to, hit the fan for us. It's either going to, make us some winners, or it's going to, it's going to take us out of the game, right? 8 o'clock, 8 o'clock, 8 o'clock, 8 o'clock. That's what we should be working. The 8 o'clock hours. What we should be working. Okay? So anyway, that's this pair here. Let's see if there's anything that gets our interest that maybe we should be looking to place a trade on here going into the weekend, right? Which I don't feel like I should be, but you never know. Let's see what we got. So here's the Great Britain pound, U.S. dollar, which we know this is definitely going to be affected by the 8 o'clock hour. Wow, look at this bullish move here, man. The last 2 days, how much did this go up by? Let's see. Wow, so this thing went up 326 pips over the last 3 trading days, man. We haven't even completed this ran right now, so that's freaking awesome. Let's see. I'm sorry, I just heard something. It sounded like we just went off. Yeah, so that's freaking awesome, man. And definitely with this one right here, I mean, it wiped out a lot of negative days. So now the question would be, will this thing continue? And if you notice right here, this is kind of what I was telling you about earlier. But when we said that the market can only move three ways, up, down, sideways, and if it's making an aggressive, straight up move, then it's usually like an aggressive buy. A lot of buyers come into the market, right? And as you can see here, right, how prices kind of went straight up, right? Boom, not really going out to the side. It's kind of just going straight up. And if you look how big that candlestick that candlestick is, I mean, that is yeah, it's like 232. And just from wick to wick, I mean, it's almost 300. You know what I'm saying? So, once again, it just kind of goes to prove what we just talked about, you know, about aggressive moves in the market and how it actually looks on the charts, right? This one right here, I probably would stay out, right? And the reason being is because I'll tell you in just a second. Just a second. Okay, and so the reason being is because one, it was down here by support and it made an aggressive move up. It's already bounced through this support here, and that should have been resistance, but it looks like it didn't even acknowledge it. Just kind of tore through it, and now it's up by the next support slash resistance, and it looks like it's probably going to make its way through that as well. At some point in time, it's only 18 pips away. And at some point in time, this thing is gonna have to get exhausted, right? You remember what we talked about before about pullbacks, retracements, and stuff like that in the market. How if you take a deep breath and then you blow your breath all the way out as far as you can, that at some point you got to go in and inhale again and take more air in before you continue to blow. Well, same thing with this right here. I mean, it's been going up over the last 3 days. It's pretty aggressive. Day two, day three, we don't know how aggressive this may be, but it's really pushing here. At some point in time, it's going to have to take a breather and pull back before it continues up again, if it continues up. And we just don't know where that's going to be at. And it's already made some pretty aggressive move over the last 2 or 3 days. So, me personally, I would probably stay out of it. That doesn't mean that you have to. If it's something you want to trade, you feel comfortable with trading it, feel free. Be my guest, have at it. But for me, for right now, I think I'm just going to sit on the sidelines on this one and just wait. I guess some points where we could probably get in at would definitely be those swings, right? That's where you put your stop losses at when you decide to get in, and definitely some trading opportunities there, man. I mean, I'm not gonna knock it. Let's look at what our smart Fibonacci says. Smart Fibonacci. Bam. Bam. Love this tool. Love this tool. Love this tool, man. Look at that. Boom, boom, boom. Look at this right here. So it's going all the way back to the red. Put it red. Bam, made money. This right here. To the red. Bam, made money. Back to the red. So that means that take profit should be up here someplace. And once again, it's a possibility, man. Fib is pointing out, saying that, 31.52.5 is where we should be expecting the next take profit at. I don't know. How many pips away is that? Bam, it's 123 pips. Could be. I don't know. I'm gonna leave it alone though for right now. I'm not gonna jump in it. I'm just gonna leave it alone. I'm gonna let somebody a little bit braver than me go ahead and mess with that. That's what I love, bro. I'm talking about right there, man. Coffee that just turned cold. Oh, that is disgusting. I know some of you iced coffee drinkers out there are gonna be like, "What do you mean coffee cold is disgusting, bro? It's wonderful." Yeah. Man, once again, they hit a strong move up. We're gonna see how this plays out. This is the Australian dollar one. 3 a.m. candlestick, strong move up. Will it continue up? That is a good question. Let's see here. I mean, and even though I'm short here, I know some people come in and say, well, hey, it might be a good buying opportunity because it buy support. It could be. It could be in the short term, but what? But anyway, let me see here. Great Britain pound, Japanese yen. Ooh, look at that one, man. Let's do smart fibs on this one too. Let's play around with this one. Ooh, smart fibs. Smart fibs. Smart fibs say it is almost there. It is right there at it, my friend. And it says that once it hits that, then you should expect price to start U-turning back down, right? Because then what's going to happen? This is going to be the new B, the B is going to be my new A, and then what we're going to be looking for is a C, which should, fall anywhere between, 0.618 and 0.236, possibly. Could go lower, could, But anyway, that's saying that this right here, this move is almost done. Won't know for sure until it's done. Man, look at that U-turn, man. Look at that. Good U-turn. And the question would be, will it continue back down again? I stay out of this one. What else we got? Great Britain pound, Canadian dollar. This is the one we're already in now. That we're panicking. Nah, not panicking. I'm joking. This is the one we're already in right now. That has been pretty aggressive, going up over the last 2 days. Bam, bam. But now we're kind of getting to a point where it's kind of indecisive as far as what it wants to do or how it wants to do it. Once again, the Canadian dollar information is going to be coming out later today, and that should definitely give some direction to this currency pair. And we expect to either see a stronger bullish candle moving up, or see a bearish candle, bearish relief candle as it starts to move back down, right? Don't necessarily expect it to retrace this whole movement today or anything like that, but getting started, going back down would be a nice start in the right direction for us. But we'll see. What's the last one we got? Great Britain pound, New Zealand dollar. Once again, looks like everything is. Looks like buyers came back in on all these pairs and kind of pushed them back up. So it looks like people are, or at least at the moment right now, favoring the Great Britain pound, right? Buyers are coming into the market. So they're looking at information that's going to be coming out over the next 24. And they feel like it should be favorable. Right? It's not really anything big coming out. There's some stuff coming out from Europe. So I'm not really sure why they're, unless they're just kind of expecting some negative information come out about other pairs they're with, or they're just kind of trying to capitalize off the momentum from yesterday when the good news came out about, that, hey, there's been progress made with Brexit. But at any rate, looks like these prices are pushing up at the moment. So we'll see how it plays out over the next 24, and whether or not something where oh man, we got, strangled, we got our ass handed to us in the market, or it's one of the things where it came back and said, hey, turned it around, man, turned it around. I'm doing good now. At any rate, like I always tell you before, man, trading is one of those things where you got to understand what you're doing if you're going to be in the market, and you also got to understand how to manage your losses. Understand that a loss is something that you can come back from, but you have to understand how and why you can come back from it, right? So we're not really worried about any losses that we may take on these trades because A, this is a demo account, so if we make $1 billion, we're not going to be rich, and if we lose $1 billion, we're not going to be poor. But the whole purpose of using the trade accounts for us to be able to go in, play around with our strategies, fine tune our techniques, and to make sure that whatever we're doing here, that when we start doing it with the real account, that we're not making any mistakes that we may have made on a demo account. That everything is fine tuned, and that we're operating in peak performance in a real trading environment versus coming in and trying to figure it out when we're working with real cash. The last thing we want to be trying to do is trying to figure it out when we're working with real cash. That's not where you want to do that at, right? You figure it out here in the demo accounts, play around with it, get a good basic understanding of the basics, understand what you're doing, and then once you are able to kind of come in here and on a consistent basis make money, then what you want to do is be able to switch it over to a live account. And then even when you switch it over to the live account, you may not necessarily want to go and trade off a standard account. You may want to go in and trade off a micro or a mini account first. Get some, get some confidence built up, get some practice built up, making money on a consistent basis in those type of accounts before you move yourself up to a standard account. Okay. Once again, it's taking those steps, man, those little baby steps, right, to get you to the point where you're a better, more efficient trader. It takes time, right? And like I always tell you guys, if I can become a better trader, I can become a trader. Anybody can become a trader, man. I made all the mistakes, all the textbooks mistakes, stupid, dumb mistakes that you can make trying to trade. I did all of those things, man. And I'm here to tell you that if I had the opportunity to do it over again, I would not make those same mistakes. I lost a ton of money, over the years trying to figure this stuff out because I didn't have anybody to show me how to do this. I didn't have anyone that could coach me along. I didn't have, any of the resources that we have today. So when I was coming through, this was something that you just kind of had to learn on your own if you want to learn how to do it. Or you had to be, at some huge firm somewhere, being a trader, and good luck trying to get that position because, those positions are far and few in between. So for me, it was one of those things where, I wanted to do this. I knew it's kind of like my passion thing that I really wanted to be a part of. And so what I did is I took it upon myself to go out here and to just really put forth effort to studying and practicing, learn as much as I could from as many, places that I could find, which wasn't many. But then, by the grace of God, pull it all together, and now I stand before you, the man that I am today, which is, a trader that not only can trade and be profitable on a consistent basis, but also someone who can also come in and talk to other folks and kind of help coach them along, and God willing, perhaps help them become consistent, profitable trader as well. Man, that was a lot. That was a mouthful. I know. And it's still not 4 o'clock yet. All right, so fastly approaching the 4 o'clock hour. And so I'm about to get out of here in a few. But what I like to do before I get out of here, and you guys know this, is I always like to leave you guys something positive. And so we were talking about the whole thing about trading accounts and practicing and everything. So it feels really good to, and you've heard me say this before, but it's going to feel really good to talk about this again, which is something that's a quote from the U.S. Navy SEALs. And that is that the more you sweat and practice, the less you bleed in war. I'll say that one more time. The more you sweat and practice, the less you bleed in war. Right? And the meaning for that, for me, is that the more you practice, the more, time you put into you perfecting your craft, to studying on the weekends, to studying on the weekdays, to, going out, you're working a full-time job, but you still take time to come back and download free courses off our website. Go back and look at the articles on our website. You go look at all the other free information that's out there. You get up early in the morning, you look at these tutorials, you catch up on these tutorials in the afternoon, all that stuff all that effort that you're putting in over time, that all that practice and all that effort, that when you do start trading with the live account, you're going to be that much better, right? You'll be more efficient because you took the time to come out and put in the hard work to do the stuff that other folks did not want to do. That you in and you did that, that you're going to be that much of a better trader, right? That is my sincere belief that your hard work, especially when it comes down to forex trading, it does pay off, right? It does pay off to work hard. It does pay off to be, active and engaging in your learning process, right? Because at the end of the day, this is an individual sport, not a team effort. And the more that you do on an individual level will impact what you receive on the individual level. Okay? So, anyway, with that being said, I'm about to get out of here, man. I hope you have a wonderful trading day. I hope you have a great, safe weekend. I hope you make a ton of money today. So that way you don't have to go back to your job next week. Um, but if you don't worry about it. Just tune in on Monday. We'll talk about, how to make more. God bless you guys. Stay safe. Take care. Until I see you next time. Bye now.